The big talking point today has been crude. After a massive sell-off yesterday, a lot of sectors benefit from the fall in crude. There are tire stocks, there are paint stocks, but one sector which will see an immediate gain from this is the aviation sector, because ATF prices will eventually fall. To discuss the likely impact on the companies, KAPIL KAUL joins us on the phone line and tracks the aviation sector closely from CAPA. Kapil, hi, good afternoon. How much will the fall in crude prices aid many of these aviation companies in the quarters to come?
Well, I mean, one is not sure that the current prices will remain for next few quarters. That's number one. But second is that there's no transparency in pricing in ATF in India. So the full benefits are not passed on to the airlines, especially in the domestic. But the fall in ATF since October has been significant, especially from quarter 4 of last fiscal. Though the fall was much more than the benefits that were passed on to the airlines. But drop in ATF is significant because almost 50% of the cost of operation is fuel. It's a very single cost item that has a tremendous bearing on the airline financials. So we would expect that the benefits of the crude falling would happen, but not to the level that is expected. Because as I said, there is no transparency in ATF pricing, so one doesn't know how the pricing of ATF is structured. But benefit of falling ATF is good news for the airlines, and as has been in the last about 2 to 3 quarters.
Kapil, hi, good afternoon. So, that point is taken. Aviation, the jet fuel prices are down 33% from peak, while in rupee terms, the raw material prices might be down even more. But to be honest, there's been more benefit being passed to ATF prices than, for example, petrol and diesel. And for international operations, of course, there are better options for airlines like Jet Airways. Do you think this tailwind is significant enough for some of these aviation companies to report consistent profit, if we assume that this kind of crude regime is going to continue?
So for international, I would think because the international structure is very different, both from a pricing and capacity perspective. There's no sales tax on international uplift, so any crude prices that fall, most of it goes directly to the international operations of airlines. So that will be positive structure. I mean, will be positive for the airlines which have significant international operations. Domestic, first, the pass on is not complete, and third thing, whatever benefits of fuel that we have got over the last 2-3 quarters has negated by a very, very below cost and very low yield pricing. So airlines resort to a pricing regime which completely negates the benefits of fuel. And we continuously see one airline or the other bringing pricing actions, which to some extent almost completely erode the benefits that the ATF pricing gives. So I'm skeptical about domestic operation, though any benefit on ATF will go directly to their bottom line as well. But international is different. I would think the international price and the structure is different, so the benefits on the international operations of Jet and Air India would be more significant. But domestic, whatever benefits gets passed on, gets negated by a very low yield environment and pricing actions which further erode yields, and that to some extent completely compensates the benefit that ATF gives you.
So let's talk about individual companies then, Kapil, because that's what matters to the viewers of this show the most. Jet Airways is actually up about 9% today, but even in the quarter gone by, the company reported a big EBIT loss of almost 350 crores. When do you think a company like Jet Airways can make it into the black?
I think their FY 15-16 numbers would be much better than FY 14-15 numbers. But Jet clearly has a structural issue. Apart from a massive capitalization or recapitalization that it requires, it still has challenges with their domestic business model. And the international business model is seeing significant upside, because last fiscal the international operations, Jet carried almost 75% the incremental traffic carried by Indian carriers. So international is very different for Jet. Domestic is different for Jet, and most of their challenges over the last few years is largely model challenges in the domestic and the competitive environment that is in domestic. So I feel that it will be maybe about 1 or 2 years, maybe 12 to 18 months or 24 months before a real turnaround in Jet is structured. though there is work in progress, there is much more structure right now than what was available, what was there about a year back. But it takes a while for them to restructure their business and turn around. I would say we are roughly about almost closer to 2 years before the benefits of JET's restructuring will come. But the ATF price would be more beneficial to them on the international side.
Okay. Kapil, of course, will soon have Indigo as a listed company, so that would be fascinating to compare both Indigo and Jet Airways. There was a time Jet was the clear number one. Now Indigo is the clear number one. Now, do you see Jet making an effort to catch up with Indigo in terms of market share, or that won't be their game now?
No, I think the comparison between Indigo's domestic and Jet's domestic, there's no comparison, because Indigo is almost out of that 96 odd aircraft, almost 86 are in the domestic and 10 are international. And almost entire traffic that they carry almost is domestic. And Jet is conservative in their domestic expansion. I don't see them expanding in domestic. Their focus is more international, and that to short-haul international to Abu Dhabi and maybe other middle points. So my sense is the domestic market share comparison would become, as we pass, as Indigo expands further, they have a very aggressive expansion in the next 2 years. So the difference between Jet's market share in the domestic and Indigo's market share would remain significant. And I don't think Jet is trying to catch up. They have almost capped their domestic expansion, or very moderate domestic expansion, whilst Indigo is going almost an aircraft a month starting from the time it was coming. So it's a different story both at Indigo and Jet, and obviously not a difference at the present moment.
Okay. Finally then, one word on SpiceJet. I mean, you were telling us that it will take at least 12 to 18 months for a company like Jet to turn profitable. SpiceJet, has been through its issues of its own for a very long time now. But now things seem to be changing with Ajay Singh coming in. What is your own view on how long it would take SpiceJet for its market share and its profitability to recover?
So SpiceJet has been a remarkable transformation from almost operational closure to now becoming stable, and as time passes and as capitalization is structured, I think more stability would come. So I think there have been a significant work in progress. There is now confidence within and externally that SpiceJet will be here to stay, and the progress they have made since December last year has been significant. The challenge before SpiceJet is to ensure that a significant capitalization happens and happens soon. That will allow them to invest back into the airline and also to some extent expand, because till they don't get their capitalization, I am not very sure that they would get the support from leasing companies till the leasing companies become more confident about leasing to SpiceJet. But SpiceJet is work in progress. I think capitalization will happen. The crude oil prices would give them a benefit. And as I said, and I've been saying that the Indigo's IPO, as and when it happens, is going to structurally rerate the sector, which will make it easier for SpiceJet to raise funds. But SpiceJet, my assessment, the expansion, though they're planning to do an expansion from Q3, you would see mostly from next fiscal. But they're making significant progress. From where they were in December to where they are now, I think it's a significant progress, though it will take a while. But I think we may be still again 12 months to 18 months from a real turnaround of SpiceJet to happen.
Okay, Kapil, two-part question. Vistara has made nice strides in their, limited flights that they operate. So do you see them scaling up operations over the next few months and years? And secondly, do you see a second round of sort of price wars between these airlines companies, which could again have a bit of a negative impact?
So Vistara is concerned. Vistara's expansion is as per their business plan. I think they were looking at about 20 aircraft induction in the first 3 to 4 years of their business. They have inducted 6. I would expect 3 more to come by September. They would be about 9 aircraft by Q3, and then they would scale up to 20 in the next 12 to 18 months from Q3. So their expansion is in line with their business case. Obviously, there are issues with respect to the 520, and if the 520 goes, then the expansion, especially in the international, become more visible. But SpiceJet is going Vistara is going as per their business plan. And as their scale improves and their network improves and becomes more competitive, you would see significant traction in their load factors. And we are expecting their load factors Q3 onwards to stabilize over 65% to 70% as their network improves. So SpiceJet's Vistara is a work in progress. As their network becomes more competitive, their load factors will become stable, and I think their P&L will improve significantly. And what was your second question? I missed your second question.
About any kind of risk of further price war as costs stabilize at lower levels.
Well, the risk is always there because there are airlines which are significantly undercapitalized. Until they don't get that capitalization, they would do pricing actions to raise cash. And I would think that the pricing actions would continue in the near term. I don't see them going. And as the crude falls, ATF prices fall, the need for more pricing actions would be seen. Because as I said, whatever benefits that ATF gives you, most of the airlines almost compensated by reducing their fares. So I think it's going to be good for consumers. We don't see any changes in the pricing regime. They continue to be focused on low yield environment, and I don't see that changing.
Okay, just one final word before we let you go. Kapil, I know you've poured through the DRHP of Indigo, and there's so much interest in this IPO. What's your own view on how investors should approach this particular IPO? Do you see it be successful? And also on the profitability, if you go through the fine print of the DRHP, you realize that a lot of Indigo's subsidiaries have actually been loss-making. Do you think that has sort of impacted the profitability of the company?
First of all, I think their profit this year, they have given a 9-month profit. Our estimate for their profitability is roughly about 150 to 175 million for FY15, which we think that is to be the record profit for this fiscal. I don't know which subsidiaries of Indigo. Indigo doesn't have any subsidiaries, so I don't know.
No, of Interglobe. No,
I don't think there is any accrual to Indigo because of Interglobe subsidiaries.
Okay.
To the best of my knowledge, most of the Interglobe subsidiaries are profit-making, but it doesn't directly impact the revenues of Indigo. So I think Indigo's IPO is positive. As I said, that it is structurally going to re-rate the sector, and I think it should be in line with their expectations.